afternoon, everyone, and welcome to Stock Market Today. It's Allie Corm and Justin Nielsen here with a look at the market action. And after the strongest week in many, many months, Justin, not too shabby to close with just modest losses today.
Yeah, modest losses, but there certainly did seem to be a little bit of a shift away from tech and back to our old favorites, the cyclical stocks, right? The metals, energy. So we'll talk about a few of those names today. Darling Ingredients in the agriculture. We'll also talk about MP Materials, rare earth metals, and finally Lockheed Martin in the defense industry.
All right, perfect. Well, first, let's take a look at those major indexes. The NASDAQ today closing with a loss of about 0.4%. The S&P 500 down just fractionally, less than 2 points. The Dow down about 0.6, and the Russell 2000 taking the hardest hit today, down about 1.3%. So even though it was just a modest decline here, resistance at a potentially key level. So that is a potential warning here for investors, Justin, but it all depends on where we go from here.
Right, exactly. So it's just as strong as last week was. I think this is the reminder that, hey, don't count your chickens before they hatch, right? You still have some check boxes that you need to go through. And we talked about that on IBD Live today. So it's nice that we cleared that the early March highs, but we still have that 50-day moving average line. And then beyond that, there's the 14,000 level, and then the 200-day moving average line. And before that, the 14,500 level. So there's going to be some elements here. And one of the things that disturbed me about last week's action was how much of it was driven by the beaten down stocks, whether it was the Chinese names or some of the most beaten down tech names that you could imagine. On IBD Live this morning, we also talked about how the biggest industry group gainer was the computer software enterprise, which has been one of the biggest losers over the last few months. So again, it was a lot of the bottom fishing that was going on last week. That's not to say that this can't be the turn, but just be aware that we've got some resistance levels that we could be hitting. Just take a look at XLY and XLK as some examples. Now, XLY is your consumer discretionary. You've got Tesla in here, and a lot of the reopening plays are in this ETF, this sector fund. And then on the XLK side, of course, that's the tech. So not only do you have your chips, but you've got your that computer software enterprise, the database, storage, all of those things. Software in there. So you can see that those areas are hitting potential resistance, whereas XLE, our favorite energy, right? That's been taking a little bit of a break, but it got support right there at its 21-day moving average line and is now looking very strong again, and certainly leading today. XME as well, the metals and mining, a lot of strength there, today as well. So the S&P 500, of course, wasn't down as much. It was about flat, whereas the NASDAQ, which is more tech heavy, took a little bit of a harder hit. So, but still, we have that large tech exposure in the S&P 500, a little bit more oil and metals and those things, the cyclical names. And so we are bumping our heads up against that 200-day moving average line on the S&P 500. So some reasons to be cautious.
Yes. Well, let's talk about some bright spots, Justin, like Darling Ingredients, DAR, a stock that's been on our watch list with this strong run up here on the right side of the base in late February, went on to form a handle, maybe a little deeper than we would have liked, but found support where you would like to see and actionable today. Whether you are a swing trader or a position trader, it was a good setup.
Well, and the depth of the handle, 13%. So you have to put it in the context of what was going on in the market. The market was coming down a lot more. This was holding at its 200-day moving average line above its 50-day line. So in some ways, you can look at that as being relatively strong compared to the market. I used 1998 as an example of 1998, the NASDAQ, when long-term capital management, failed and had to be bailed out. I mean, that had a really sharp double bottom, and it was the stocks that were holding up and not undercutting that had some of the biggest gains. Charles Schwab and AOL among them in October of 1998, up 400% each in 6 months roughly. So I don't look at the depth of that handle as necessarily a disqualifier because relative to the market, there's a lot of strength. But what we saw today, hey, it was breaking that downtrend of the handle, so potentially offering an early entry as it broke that downtrend. And so this is something, as you mentioned, was on our watch list. We had it on the leaderboard watch list. We added on both leaderboard and swing trader today. We waited. And this is perfect what you're showing, because we had that strength in the morning and we were thinking of adding it. Powell came out with some comments, saying inflation is too high. Well, yeah, we knew that. The market was, pulling back pretty sharply, and darling ingredients along with it. And so we used this opportunity as it was bouncing to enter it in swing trader. And so that was right around 76 when we got into that, and then leaderboard followed a little bit later on. So this is certainly one that is kind of interesting. It's in that agriculture space. They do have this element of biofuel, where they take the fats and everything like that and turn that into fuel. That could be interesting as oil prices skyrocket. That's still only 10% of their revenue, a little bit under that, but it's also very highly profitable. It manages to make up a large part of their income, as opposed to feed, which is a much larger part of their revenue take. But there's a lot of input costs that are going on with the feed ingredients, so it's not quite getting the profits from that that it was. So this will be interesting to watch. Certainly agriculture is still a space that is showing a lot of strength, whether it's the fertilizers, CF Industries, Mosaic that we've been talking about. Bunge was also added to swing trader today. So there's a lot going on in that space.
Yes, there is. And I think that also is why it pays to continually be screening for stocks and have them on your watch list and be ready for a move like this. So that way you are not caught off guard, because this is a lesser known ticker out there, right? But it provided a great opportunity today for those who were ready for it and had it on their watch lists.
Right, and this is where sometimes those lists that we have in MarketSmith can really help you out, because again, different screens will just make things come up on top of your radar that maybe, as you said, that you just haven't heard before, whether it's the relative strength that's making it appear on your list. But then once you see a technical pattern that looks interesting, then you can dive a little bit deeper into the story. And there's so much information out there between 10Qs, 10Ks, investor relations, presentations, not to mention analysis from all sorts of different sources, including Investors Business Daily, of course.
Right, exactly. Well, speaking of, let's check in on the stock of the day today, which was MP Materials, up about 4.5%, some above average volume behind the move. So for those who maybe missed this stock on a little bit of an earlier entry on Friday, today offered a chance to potentially get in.
Yeah, at least a nice follow-up to Friday's action. So again, you had so much that was going on last week, and a lot of those stocks were looking a little bit weaker, but MP Materials following up on that action. This is one that we also talked about on the podcast last week. We were talking with Will Ryan from Granite Shares, talking about a lot of commodities, because that's where their focus is. A lot of ETFs focused on the commodities, and so this is in the rare earth metals. We've talked a lot about different metals, whether it's the steel, gold stocks, what have you. And this is in the rare earth metals. We also have uranium that we've been talking about. So there's a lot going on in these miners, the metal ores. So this is just, again, a follow-up to that strength that we were seeing. And again, this looks very different from a lot of those tech names that were destroyed over the last few months, or actually over the last year, because a lot of them popped in February of 2021. So again, maybe not the stocks that you typically have on your radar, maybe not the most exciting stories in a lot of cases. They're not, doing exciting things like electric vehicles, but sometimes these are providing the components that might go into those electric vehicles. And that's certainly what goes on with like a lot of the copper plays and MP Materials with the rare earth. You got lithium in there. So there's reasons to be excited for some of these areas. Plus, you've got a lot of supply chain disruptions in the area because of what's going on with Russia and Ukraine. But you had a lot of this strength happening even before that.
Right. And I guess a little quick explanation of this trend line that I have here, because this is a stock in its prior move late last year. We were watching and we had a number of participants when it was hitting its lows say, what do you think about MP? What do you think about MP? And, Chris was saying, draw a trend line from the highs. And when it crosses that, that's not necessarily a chance to get in, but just don't even have it on your radar. There's so many other stocks that you could be focusing on, but once it gets back above that trend line and the 50-day line, then start to see if it can tighten up, form some sort of pattern and buyable area. So that's another way that you can use trend line alerts as well. Just, a stock that's made a nice prior move, but it's working on a base, and that can get it back on your radar.
That's such a good point, Allie. A lot of people will look at it at the lows and be like, okay, how do I get into it now? Because it's on sale and it's at a discount. And it might seem crazy. Well, wait for it to get higher. Wait for it to get up from, what was that, 32 to over 40. Wait an extra, 10, 20% before you enter into it. But sometimes it's not about getting the lowest price. It's about getting the best price, the price that has the odds more in your favor. And I think that's exactly what was happening with MP today.
Yes. All right. And last but not least, defense stocks back in focus today. Lockheed Martin among them with a gain of about 3.2%. Looks like it didn't quite have above average volume by the end of the day, but these stocks are, on the move, like I said, bouncing off of their 21-day lines after pulling back briefly. And could we see another explosive quick trade here in these defense names?
Yeah, so I'm going to get a little wishy-washy here because I think that there's some positives and there's some negatives. I mean, of course, you have what's going on with Russia and Ukraine. A lot of the European nations upping their potential defense spending. You also had I was reading an article in the street about some of the weapons that Russia was using. That maybe look at, hey, the U.S. has to develop some of these, and the street was mentioning three names in particular: Lockheed Martin, Northrop Grumman, and Raytheon Technologies, as being in that missile area. So going back to the chart here, a few things that I don't like. You see those two big volume spikes. Now, Friday's action I can excuse. It was an options expiration, triple witching. That's going to spike. You saw that in the market as well. But you did have a higher volume signature on the downside and not as much on the upside. As you noted, we didn't really have the volume pickup today like you would have expected to see on a bounce like this. So, and it's also extended. So you have to be careful here. This had such a strong move from below 400 to almost 480 and a 20% move in just a couple weeks. So it was very normal for this to have a pullback, to take some breathing room. I would say that if you take the step back to the weekly chart, the retracement doesn't look completely out of the ordinary for, again, that strong move that you had. This is really not too bad of a retracement, but it's iffy, and there could be a lot of news headlines that do toss this to and fro. So you have to just be aware of that and know what you're getting into, and can you handle that volatility? So there's some, I think, real soul searching you have to do before getting into some of these stocks.
Yes. All right. Some good points there, Justin. Thanks so much for breaking everything down. We will be back with more tomorrow morning on IBD Live. So make sure you join us, investors.com/IBD Live, for all the details. Thanks for tuning in, everyone. We'll see you right back here tomorrow.